Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week get everything you need to know in 90 seconds at 9 o'clock. With news, it's the same story continuing. Benchmark yields are still pushing higher. But first, after the prior week's rather unexpected surge, American mortgage applications fell last week, reverting to the negative trend we've seen since May 2023. The usual culprit was responsible. Mortgage interest rates rose again, this time to 7.41% plus points, their highest level since December 2000. And staying in the US, new orders for durable goods rose just 0.2% in August from July, a minor recovery from the 5.6% slump in July. But the result was better than market forecasts of a 0.5% fall. Meanwhile, American household bank deposits fell for the first time in data going back to 1994. Total deposits slipped 4.8% in the year through June to about $17.3 trillion as customers pulled out money to invest in high-yielding alternatives. In a country as large as the US, that involves a movement away from banks of $900 billion. The main beneficiaries, though, were money market funds. In China, they released their industrial profits data yesterday that showed profits fell by 11.7% from a year earlier in the first 8 months of 2023, amid weak demand at home and abroad and persistent margin pressures. And Australia has a monthly CPI indicator series, tracking inflation between their main quarterly assessments. For August, that came in at 5.2%, up from 4.9% in July. In June, the rate was 5.4%, although the overall second quarter official Aussie CPI was 6%. And Australia released job vacancy data, but it is on a delayed basis, and the latest is for May. That shows job vacancy levels slipping away, and quite quickly, down 10% from a year ago. It would have been worse without a 14% rise in public sector job vacancies. With their labour market softening, perhaps it's no surprise that Australia's retail turnover is very lacklustre, hardly growing in current dollar terms and nowhere near enough to account for inflation. But the main overnight news continues to be the rise of benchmark interest rates. The US Treasury 10-year yield starts today up another 9 basis points from yesterday at 4.64% to yet another recent high. And the price of gold will start today at just on $1,875 an ounce. That's down $26 from yesterday. This is its lowest level since February 2023, all driven by the sharply rising yields. And oil prices are moving up $3 to just under $93 a barrel in the US, while the international Brent price is just over $94.50 a barrel. This takes them back to levels we last saw in July 2022. And the Kiwi dollar starts today at 59.2 US cents, down a quarter cent from this time yesterday. But against the Aussie, we're up to 93.1 Australian cents. Against the euro, we're still at 56.4 euro cents. That all means our trade-weighted index starts today at 69.4 and down just 10 basis points. Get more news about the New Zealand economy from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.